Welcome back to the Dividend Diplomats YouTube channel. You got Bert, Lanny, the Dividend Diplomats. Guess what we are about to talk to you about today? Another undervalued dividend growth stock.
Not just an undervalued dividend growth stock, but could this be an undervalued dividend aristocrat growth stock?
I think it could be, Lanny.
Well, before we do, smash that subscribe button. Give Bert the hurt and I a nice thumbs up. Turn it blue. We're coming to you on the YouTube screen, so let's bring it, baby.
As you can tell, based looking at our last videos over the last few weeks, we are thirsty for some undervalued dividend stocks. We want to, even though
Cash is ready.
Yeah, it's ready to go. Even though the stock market continues to set record high after record high after record high. They were what, over 4,400, Lanny?
Over 4,400. S&P 500 up 20% year to date. Almost 50 or 40% on a 52-week basis. What are we going to do, man?
We are going to continuously investing in undervalued dividend growth stocks, but we need to find undervalued dividend growth stocks first to invest in.
And to do that, we look at our trusty Dividend Diplomat stock screener focused on 3 dividend stock metrics: the price to earnings ratio,
the payout ratio, and
the dividend growth rate, the third dividend metric. And as that bonus, we will talk to you about the dividend yield.
It's like after a wrestling match finishes, Triple H wins, and he gets out of the ring, gets the sledgehammer after it's all done, and then just goes to town. That's what we do when we introduce the bonus yield.
Match is over, but guess what? We're just going to make the fans get crazy. And that's what we're here to do today. Because Bert, this Dividend Aristocrat dropped not 1%, not 2%, not 3, not 4, 14% on August 5th. And they are Dividend Aristocrat. Bert, who is this company?
It's actually funny. A lot of you guessed this. When we released a video last week about a undervalued dividend stock that was dropped over 10%, you thought we were talking about this company. We were talking about Clorox, a different aristocrat that dropped 10%.
Another one.
That day, though, this company, Cardinal Health, ticker symbol CAH, dropped over 14% after their earnings release.
And Bert, what were some big highlights that you took from the Cardinal Health, ticker symbol CAH earnings release that caused that stock price to plummet?
So there are a few things. The one I should start, let's get this out of the way. We know that there was the big opioid settlement between Cardinal Health, Johnson & Johnson, and I can never remember the third company. And it doesn't matter because there was Cardinal Health. The companies combined agreed to pay over $26 billion for their role in distribution during the opioid crisis. From that, Cardinal Health's portion of it was over $6 billion, and they've agreed to pay it over 18 years. So this was the first time it popped up here on the financials. They recorded $149 million expense related to that. So it'll be 6.4 over 18 years, but you see here 149 million right out of the gate in this quarter.
Wow, so they're paying 6.4 billion over 18 years?
Yeah. It's a lot of money here for Cardinal Health.
It's a couple more dollars than I have. Not only that, but they also took a hit related to the pandemic. A healthcare company taking a hit due to the pandemic. That's because they actually really stockpiled their inventory with what?
With a lot of protective equipment that they were supposed to distribute out. They overshot it so much that they recorded a $197 million charge to write down that inventory.
So essentially what that means is they bought it at X and they can't get rid of it fast enough. So now they're gonna have to sell it for either less because the value is just not there.
Yeah, it wasn't all negative though. They had the one other thing that jumped out. Q4 sales increased 16% year over year to $42.6 billion. I keep forgetting how large their sales are.
That is a lot of dollars coming in at the top line.
Compared to last year, but in that too, management was quick to announce that quarter it was compared to last year was one of the worst quarters they've experienced due to the pandemic, and they saw a lot of their products and supplies, just sales fall to a halt. Management did note that they are back to pre-pandemic levels, but so the 16% growth is great, but it's misleading because they're finally back to where they were pre-pandemic.
So Cardinal Health, a Dividend Aristocrat stock, has had lower dividend growth rate recently. Obviously they're facing a lot of, not pressure, but I would say they're getting a squeeze potentially due to the risk of Amazon also getting into the, delivery of health products. Because they're kind of cutting out what Cardinal Health is usually, doing.
Yeah, it is always the nagging concern here is will Amazon come in and take them out? But it's been resistant so far. They fought it off. They're really ingrained in the distribution of these supplies. It's not easy for hospital systems and networks to change who they're getting their supplies from.
So as of this last, on Friday here at the end of the first week of August, Cardinal Health was trading at just under $51 at $50.99 per share. And with that 14% stock drop to that price point, it's time to see if Cardinal Health is a stock to buy, and maybe this stock drop created a lot of value and potentially an entry point or a read-add point for shareholders out there looking to add a Dividend Aristocrat that may be yielding closer to 4%.
Let's jump right in then, Lanny. Let's go into that first metric here. With that share price of $50.99 to end the week, forward earnings are $5.99. That gives you a PE ratio of 8.51 compared to the market. Screaming value.
Wow.
Interestingly, though, compare that to our last video where we talked about two dogs right there, the dividend stocks. It's also well below Kraft and KMI, which were right around 14x.
A PE ratio of 8.5. They've been around this low, upper single digit, low double digit PE ratio for quite a while. And that's probably because Cardinal Health, ticker symbol CAH, is down 39% in stock price over the last 5 years. But Bird, what are they down year to date and on a 52-week basis?
Year to date, they're only down 3.67%, and then over the last 52 weeks, they're down 3%. So they did have a nice run up with appreciation there before this earnings release. So you can see they're now kind of level set after this massive decrease. They dropped in the last week. It was officially over 14%.
14% stock price drop. P ratio at 8.5. That second dividend metric, the dividend payout ratio, which really talks to the safety in the dividend and the potential to grow their dividend. And Bert, based on that dividend of $1.96, what does that payout ratio look like?
32.72%. So,
wow, pretty low.
So even with slumping sales, even with impairment charges, even with settlements related to this, I'm still not overly concerned about the safety of the dividend. We may not see great dividend growth, but the safety of it I'm not concerned at because they have so much room below that 100% payout ratio mark.
Having increased their dividend for 25 plus years, being in the Aristocrat family, what's that 5-year dividend growth rate on average?
3.98%, so it's right in line with inflation where it's at right now. So
not bad. Okay, You're getting a growth rate of mid-single digits, not too shabby. But as a bonus metric for Cardinal Health, where are we at with the dividend yield?
3.84% after the price fell. So at least it's a high yield, almost at 4%, with a near 4% dividend growth rate. High single-digit dividend factor.
We like tomato, huh?
Yeah, we like to see 10%, but it's not bad. But the dividend growth is going to be key for this company going forward.
You own Cardinal Health.
I own a lot of Cardinal Health, and so it's one that it'll be interesting to watch over the next few weeks to see how much does the price continue to fall, and it may not hurt to continue lowering my cost basis in this company.
Can management make this turn the right direction?
I'm always a sucker for Ohio companies. I like to think that Ohio's got the best businesses in the world, right? Kidding, but never bet against Ohio is the moral of the story.
That's right, Cleveland versus the world. So Cardinal Health, $51 share price essentially, with a very low price to earnings ratio below 9, a safe dividend payout ratio at just above 30%, with a 5-year dividend growth rate of almost 4%, increasing that dividend for 25 plus years, and a yield that's approaching 4%.
And they're severely underperforming the market year to date, which has been up almost 20% as it continues to set record highs.
Is this a dog? Give me some feedback in the comments if you guys think this is a dog of a stock.
Yeah, we want to hear. Are you watching Cardinal Health after this? I know I'm going to be watching. I'm not running to buy because I have such a large position, but let us know what you're doing. Lanny, what are you thinking?
I just don't want to be caught in a trap here with Cardinal Health. I think I might need to see a couple extra quarters before I add them to my stock watch list just to see if they've gotten all the impairments out of them.
That's a fair assessment because it still can keep going down. That inventory is not worth zero yet, so we better hope.
Just because you write it down once does not mean you can't write it down twice.
Exactly. I think that's a great point. So, I'm with you. I'm going to watch them. They're great. They keep falling, maybe different, but I have enough, so I'm going to keep looking elsewhere. I'll keep them on my watch list because I am never going to say no to an undervalued stock.
You're not going to buy 1,000 shares?
I'm going to buy 5,000 shares. Kidding. Joking. Everybody, let us know again your thoughts. What other undervalued stocks you want us to do in research and keep it. We're building a list, so don't worry. We're not ignoring you when you put us in the comment section what stocks.
Give us a thumbs up if you've been liking more dividend stock analysis videos, because we're trying to see, okay, what videos do you like to watch? Which ones entertain you but also inform you? Which ones get you riled up so much that you grab the person next to you and give them a DDT or a pedigree?
Exactly, and thanks everyone who subscribed to our channel over the year. We appreciate it. Help us keep growing our YouTube channel so we can keep bringing more dividend stock analyses.
Guys, that was Bertha Hurt and Lanny from the Dividend Diplomats.
Over and out.